In terms of where should you invest as a person, if you have access to private equity, I still think it's a very important place, but I'm not so fond today of the larger PE firms. I think the use of leverage, which is typically 5 to 6 times EBITDA, we're at a 10% to 11% interest rate is formidable in terms of sucking out cash flow you could otherwise use to grow companies. So that's why we don't like to lever. So I'm not so fond of those. So there's been some big funds raised, massive. I just can't see how you can get the sort of traditional returns in those. I like secondaries in terms of institutions should invest in secondaries. I think there's still a supply-demand gap.
Yeah.
Like there's not enough money in the market. And a ton of people are looking for liquidity all the time. Last year, there were very few companies being sold. So a lot of institutions who need to pay out, you can imagine, look to sell their portfolios. And so the secondary market's been very active and I think, very attractive too, because I think they're buying it below par.
Yeah.
So somewhat, not huge, but so I like that area for investors in our market. I like the lower middle market. I think you'll see a lot of institutions are going towards credit, because credit yields now are so high compared to the past that a 10 to 11% return is very attractive to their institutional base. So, for instance, the big public pension funds, if they can do 11%, 10%, 11%, it's above their hurdles.
So it's the things around the periphery of big buyouts that are still attractive, but not necessarily the the buyouts themselves.
A lot of people have gone into credit for whatever reason over the years, maybe because they just saw the basket for PE being so small, so they were just going to go for the swing for the fences, which is what you'll hear. But the credit thing has really taken off a lot because the default rates are actually relatively attractive. My view about senior debt on large buyouts is if they're structured properly, very, very low likelihood of losing money if you can wait long enough. So you might go through some cycles, economic cycles, but if you hold long enough, that's been my experience anyway.
Yeah.
So I think, it's now you'll see it's taking root all over the world now, credit. It's become a staple of a lot of the big funds where it was not, say 10 years ago. Private equity swing for the fences, we're going to get great returns, but it's only going to be a small portion.
Yeah. And is it a cyclical trend? Will interest rates hit rock bottom again? Will it become less attractive and go back to where it was? Or is it?
No, I think that's right. I mean, that would suggest, if that's the case, that of course inflation's under control, which is good, very good for our businesses. I think that there are other headwinds like COVID, for instance, that happen. They're out of the completely out of the blue. You can't factor in, but you have to think about those potentially coming in. And what happened during COVID was a lot of the private equity funds really protected their assets by putting in more equity, and so were able to ride the storm. And plus, there was some fair amount of government help, as you know. So, but I do think you need to be thinking about cyclicality within the business itself that you've invested in. But I think there's probably cyclicality, as you say, in investing. For instance, distressed used to be, a hot topic. People like to invest in distressed funds where you buy a company that's filed for bankruptcy and you take over the company, you fix this, that, and the other. Well, that's been a terrible market for the last 10 years.
Yes.
Maybe it'll be okay this next few years. We'll see.
Yeah.
But interesting. So there are cycles.
Nothing's good forever, and everything comes around eventually.
Well, exactly. And think I also liked lending for venture capital firms.
Oh, yeah.
You get a fair amount of equity associated warrants and so on. And I always thought that was a very interesting play, particularly if there was value in the company. So not too early, but had got to a certain level. And I still do like that space. And the players in there have shrunk. So Silicon Valley Bank was a big investor in that space, of course.
Yeah, we just had a lady in here actually from a company called Bootstrap Europe that bought the German portfolio of Silicon Valley Bank. And I hadn't thought about venture debt as a kind of an asset class before, but I think you're absolutely right. It sounds very attractive.
Yes, I like it. I like it.